Welcome to the Liquidity Detective. If you've ever felt like your stop is being hunted, or if you're not paying attention to volume yet, you might want to watch this video. Today, we're breaking down a Sunrun chart to show exactly how liquidity absorption works and how large players quietly move the market. This video is for educational purposes only. This is not trading advice. We're teaching market mechanics, not telling you what to buy or sell. Most traders think the market moves randomly, but large players need liquidity to enter or exit positions. Price often moves towards areas where orders are stacked, creating opportunities to observe how smart money operates. Here's our example chart for Sunrun on the daily time frame. Everything we discuss comes from real price action and volume on these charts. To make it easier to follow, meet our characters. Tommy is a trader who loves support. Timmy is a trader who sells resistance. Both think they know the market, but sometimes they create liquidity for bigger players without realizing it. So what happens? Both Tommy and Timmy keep trading in predictable ways. Their orders, stops, and reactions accumulate in key areas, creating liquidity. Large players watch these zones closely. It's where they can absorb orders. You might notice I've coloured these differently than usual. Red doesn't mean sell here. It shows where selling pressure and stops are likely sitting. Green shows where buying pressure builds. So here on the chart, as you can see, we've got the red line and we've got the green line. The red line being support, the green line being resistance. The stock trades sideways for a period of time. We're going to assume Tommy thinks this area here becomes support. So he decides to put his stop loss below. He's likely going to get stopped out here. On the other side, Timmy sells near resistance. His orders and stop losses accumulate above the level. Just like Tommy, he's creating liquidity that the market can use for larger moves. Now we get to the key moment, absorption. Look at these small candles with large volume. This here is going to show absorption. Selling pressure is hitting the market, but large buyers are quietly absorbing it. Let's take a closer look. Firstly, when a price keeps hitting a level but doesn't fall further, it often means someone large is absorbing supply. The first high volume small candle appears after the price moves up past resistance with a volume spike before dropping back into support. Here the candle is small, but the volume is large. This tells us, again, selling pressure is hitting the market, but large buyers are quietly absorbing it. Next, price starts to move up again, and then drops below support. Volume is now much larger than the previous absorption candle. Sellers are met by absorbing buyers, and the liquidity is captured. In this example, this is the final setup before the market can expand. Finally, with selling pressure absorbed, price moves higher decisively. This is the expansion phase. Notice that the largest market positioning often happens quietly. Small candles with high volume before the big move occurs. I've marked in key areas on the chart for all to see. Trap sellers, the liquidity and absorption zone, and now the expansion phase. Thanks for watching this liquidity absorption example. If you want to learn more about liquidity, absorption zones, and market mechanics, like and subscribe to the Liquidity Detective for breakdowns. I hope to see you in the next video.